Hello and welcome to Business Incorporated Live on Channels Television. It's another trading day right here, and the month of November winding down really quick. Here's what's coming up in the next 55 minutes. Uganda set to cut nearly all external borrowing by 98% to curb rising debt. And Kenya's FX reserves hit a three-year high of $9.32 billion after heightened inflows. Plus, Afrexim Bank set to eject $1 billion into Zimbabwe to support Zimbabwe's economic growth. And it's good to have you join us. I'm Ladi Williams. Let's get a check on the markets now. Let's see if the euphoria is still there. But we're seeing gold down for a fifth straight session to hit its lowest level in 8 weeks, pressured by a stronger U.S. dollar and rising Treasury yields amid uncertainty over the pace of the Federal Reserve's interest rate cut. So we got that inflation number yesterday, and some are saying it might be a 25 basis point cut. Well, we see spot gold there. That's $2,559 per ounce after hitting its lowest since September 19th earlier in the session. U.S. gold futures fell about 0.9% to $2,564. The U.S. dollar advanced to a one-year high, making gold more expensive for overseas buyers, while Treasury yield rose to its highest since July. Investors are awaiting the U.S. Producer Price Index and weekly jobless claims, both due today, as well as comments from Fed Chair Jerome Powell, who's scheduled to speak later in the day. But we'll see spot silver, that fell about 0.9%, reversing the gains from yesterday as $30.05 per ounce. That's the lowest level since September 19th. Platinum so lost about 0.5% to $933. Let's get a check on oil now. We see oil prices still down from early trade, reversing most of the previous session's gains. That was yesterday. So 0.5% down. That's for Brent, $71.93 a barrel. Closely watching this $70 range for Brent. It did fall below it at some point, but we'll see if it's going to retest those lower levels again. WTI crude, 68, still $68.01, down about 0.6%. Still about global oil demand outlook put out by OPEC. So they've cut that demand outlook, and definitely that's weighing on the price there due to, China. It's all about China now, the biggest buyer of oil. So if the economy is not looking good, then it's a no-brainer at this point. We see that commodity going down in price there. All right, to other stories, we see the infrastructure Concession Regulatory Commission and the Ministry of Power say they've set up plans to source part of $10 billion required to provide regular electricity across Nigeria from the private sector within the next 5 to 10 years. The decision was one of the key outcomes of the meeting between the Director General of the ICRC, Dr. Jobson Ewelefo, and the other Minister of Power, that's the Chief Adebayo Adelabu. Speaking during the meetings, ICRC's DG said the Commission had issued a 6-point policy directive which has streamlined the process of PPP service delivery in a bid to accelerate PPP investment. On this part, the Minister of Power said the government alone will not be able to meet the funding requirements of the electricity sector if stable power supply was to be achieved in the next 5 to 10 years. A South African pay TV operator, MultiChoice Group, says it has written off the 31.6 billion naira, about $21 million cash it had with the liquidated lender, Heritage Bank. The group made this known as financial results for the 6-month period ended as of September 30th of this year. The write-off in Heritage Bank comes just as MultiChoice is reported to have lost more than 243,000 subscribers, particularly in Nigeria and Zambia, within the last 6 months, due to high inflation, which has forced many of its customers to ditch their decoders. The MultiChoice had earlier in its group annual report for full year 2024, released in June, reported a deposit of 33 billion naira with Heritage Bank as of 2024 fiscal year end of March 31, 2024. I will see reactions still trailing recent data by the Debt Management Office showing Nigeria's total debt stock hit about 134 trillion naira. That's about $91 billion. So I spoke with the CEO of Think Business Africa earlier today, Dr. Ogo Okiti. He believes Nigeria must set a debt ceiling and abide by it. Take a listen.
We can't stop borrowing. However, we can put a limit to the growth in debt. In every analysis and show I have appeared on in relation to debt, I have said that, look, the rule for debt at this stage in Nigeria's economic trajectory now, the rule should be our debt should not grow beyond the real rate of economic growth. So now we are doing about 3%. So I do not expect that Nigeria's debt should grow beyond that level at this junction. Anything beyond that 2-3% is just contributing to the inflation and, of course, to the depreciation of the naira that we have seen. The source of the problem is fiscal. The source of the solution should also be fiscal.
I see the 13th of November during the COP29, the Africa Climate Summit and the African Union Commission and His Excellency Faure Nasibe, President of the Republic of Togo, co-hosted a meeting celebrating Africa's climate leadership to action with African leaders and global partners to examine the impact of the inaugural Africa Climate Summit and chart a roadmap to galvanize climate action in Africa. Well, join us to discuss more now. We have Mr. Joseph Nganga as the Vice President, Africa Global Energy Alliance for People and Planet. That's GAP, joining me via Zoom. Great to have you on the show. Okay, so we'll try and get Mr. Nganga. Okay, can you hear me now? Okay, yeah. So I want you to tell me the key outcomes. It's a bit noisy where you are.
I am at COP29, and I suppose you want to know the key outcomes from the gathering of the Africa Climate Summit yesterday morning, where we had the President of Togo, among other African leaders, speak to the Africa Climate Summit and the progress. There are three main outcomes. One was celebrating progress. Since the Africa Climate Summit, we have initiatives such as the African Green Industrialization Initiative. We have the APRA initiative that's driving renewable energy on the continent. We have discussions around appropriate climate finance and so on. So one was to celebrate progress. Two was to insist that while the movement in the terms of the global financial architecture reform, including a replenishment of IDA and the Africa Development Fund with the AFDB, a lot more is needed at scale and appropriate for investing in Africa. And three was a reiteration of the commitment by the continent to drive Africa and the world in terms of solutions on the climate agenda through the resources we have, but a clear demand that the appropriate financing and technology must accompany our contributions for us to be able to provide solutions to the world and to ourselves.
All right, what steps African nations and partners, what steps do you think they should take to mobilize capital and implement projects, that drive green growth investment?
I think number one, of course, is policies and regulations. Our countries, our governments must come together and determine what are the priorities in terms of investment and make the right policies and regulations that support large-scale investment. Number two, the global financial architecture reform must allow for large-scale, affordable financing to turn what we have today, which is raw materials in the ground, such as iron ore and aluminum, our huge young population, our nature assets, into usable equipment and assets for the climate solution. So number two is appropriate finance to drive unlocking of the solutions. And thirdly, of course, is collaboration. No single country or continent can address the climate challenge alone. We must work together, each pulling on their strengths, to ensure that we are solving the climate challenge. And hence, very supportive of the African Climate Summit narrative that we're in this together. Africa is not a victim. Africa is part of the solution. We want to be at the table and we want to be in the leadership role in terms of unlocking the solutions.
Right, and I can feel the energy right there at COP29 where you are. I can hear the whole ambience, very packed energy in that room. But do you think there's political will, in the countries, such as Nigeria, Ghana, and Togo, and beyond, to realize this sustainable development and support for this energy transition? Do you see that?
Absolutely. I see progress on conversations such as greater finance, and this COP is about finance, and I see progress there. I see progress on the technology side. There will be announcements about a commitment to 1.5 gigawatts of battery energy storage, which is critical to countries like Nigeria, where the grid is relatively unstable. And so having appropriate battery energy storage ensures that you have stability in the grid. As you know, Nigeria had its sixth grid collapse in October this year, and that means that we need technical solutions that help us address our infrastructure challenges, and the commitment to battery energy storage at scale is another example of what we are seeing being discussed at COP. So overall, important discussions being had, but we need to be a lot clearer as Africans on what is important to us and stick to our guns so that we're able to meet the challenges that are uniquely African.
All right, thank you so much. It's great having you, Mr. Joseph Nganga, Vice President, Africa Global Energy Alliance for People and Planet. It's great having your perspective, and I can feel that room really charged. Thank you so much. All right, now to our next conversation. We see remote work is set to be a fundamental element of the workforce of the future, while there's still some, critics, that the numerous advantages it offers for both employees and employers suggest that this shift is likely to endure for a while. But how can Nigerians position, for this market? Join us for this conversation. We have Enoika as the CEO founder, Business Analysis School, and she's joining me right here in the studio. Great to have you.
Great to be here.
Yeah.
Thank you.
I know you're more abroad.
Yes.
And you've come to Nigeria, for some important business. So talk to me about your experience in Nigeria so far.
Ladi, my experience has been, it's been a mixed feeling.
Right.
I've enjoyed the food, authentic Nigerian food. It's been hectic, the traffic, and lots of frustrations. But so far it's been good, and I'm excited because I'm here to impact with the Business Analysis Summit. So it's going to be fun.
Yeah, and definitely. I'm sure you've had all the food that you've missed for so long. But, we keep talking about remote work, and I keep hearing that some Nigerians, they live here, and somehow they're able to earn, by doing some remote jobs here for some companies, out there in other countries. So talk to me about, is this segment growing? How's it looking?
Ladi, it is largely growing, all right? Like right now, over 40% of professionals in Africa right now work remotely. In Nigeria, it's 29%. That's a huge number of people. And right now, 8 in 10 workers either work remotely or hybrid. And they've seen increased work-life balance, and they earn more, and they save more money. And in terms of getting jobs abroad, it's actually not hard anymore because we all have global skills. And so these skills that you have right here in Nigeria can serve a business in America, can serve a business in anywhere in Europe. And so for Nigerian professionals, I've been telling them for a long time, your skills are exportable. So we export produce, but our talent is also exportable outside of Nigeria.
Right, and talking about some professionals you've been speaking with, I'm sure some of them already have jobs here, and they're able to juggle another remote job in another country. Is it that easy?
Well, that's also possible. Here's why: because of the time zone difference. So after work, you can shut down your laptop and support another company in another country. So you can support a company in Canada or the US as a freelance graphic designer, content creator, data analyst, software developer. You can work weekends, flexible hours, freelancing.
Right, and is it that easy to get to land some of these jobs?
I wouldn't say it's expressly easy, but I think the higher the level of experience you have and skills, the better the opportunities for you. And you have to go through a lot of testing. It is highly competitive, but I see a lot of Nigerians passing through all the hurdles of landing these opportunities. So I would say with the right skills and opportunities and skills and experiences, of course you can.
And when it comes to, certification, you don't need to go and get maybe a degree abroad or have to have a degree abroad to be able to, play in this market?
You do not need to have a degree abroad. Ladi, I do not have a foreign degree. I still have my bachelor's from University of Benin. And I've worked with companies in Canada and the US, globally. And so I tell Nigerians, the skills and experience we have, we're one of the smartest people in the world. And so we can leverage the skills and experiences that we have to serve the world as well.
And I'm sure there are, some people, watching and wondering, oh, I've tried to get on most of these websites. You have a couple of websites where you can actually, go and try and get these jobs. But, some people say, I've tried, I can't find, I'm not getting the response that I'd expect, from most of these websites. Well, is there some kind of trick to it?
Well, I wouldn't call them tricks, but there are definitely ways to bypass a lot of hurdles. As we know, we're Nigerians, and so some of these platforms might just feel like maybe you can use a VPN to change locations. I see that happen, but I think also is your profile, the strength of your profile, and I think that's something a lot of professionals don't know how to do, is communicate their value. So if you've worked at a large organization in Nigeria, you can serve other organizations at the same scale. So I always tell Nigerians, don't downplay your experience. Instead, communicate your value. Create a standout portfolio for yourself. And of course, when you get to interview, speak confidently and speak fluently. That's very important as well.
So that can set you aside or set you apart from the crop.
It definitely sets you aside, having a strong portfolio and communicating your value persuasively.
All right, let's talk money.
All right.
At this point, what are the salaries like?
Oh, well, so in terms of remote work, it's sometimes hourly pay is per project, or you can even negotiate an annual pay. So it really depends. For roles like virtual assistants, it's anywhere from $5 to $10 per hour to start. But for roles like business analysis, data analysis, software developers, they're making $40, $50 per hour. And so in a month, they're making, close to $4,000, $5,000 per hour per month, depending on how much work they do. And so it's a lot of money when you convert it to Naira, and increases your standard of living so much.
Right. And I guess, those that are already working, or staying in Nigeria and working abroad, when it comes to getting those monies, into the country, I'm sure they don't have any problem with that.
There are many financial solutions you can use to actually receive payments from, from abroad in dollars, in pounds, in euros. There are lots of financial solutions you can use to receive the funds and, transfer that back into your, domiciliary account in any of the Nigerian
Because I'm happy,
banks.
Anything that brings in foreign currency,
Really?
into the country, I'm down for that.
Yes. We need that inflow for sure.
We need inflows. We need inflows. And if you're doing it from your bedroom,
oh, yes.
That's definitely not bad.
Yes. Ladi, I have a fully remote team. My team is fully remote. I have team members here in Nigeria. I have team members in Pakistan, in India, in Philippines, and in the US and Canada. And we function fully as a virtual team.
Right. And I'm sure technology plays a lot.
Yes.
A huge role.
Yes. Huge role. Everything is done remotely. Meetings, collaboration, all of that. Everything is done remotely thanks to technology.
And I'm sure you work with, some people in Nigeria.
Oh, I have a full team here in Nigeria.
So, because definitely internet.
Yes.
That is one hurdle. How are they able to navigate that?
Well, I provide, data, cell phone. We find alternative ways. Sometimes they work from out of a workstation too as well. So we try as much as possible to provide alternative solutions, but we know it's Nigeria, right? So like I told my team this morning in our meeting, have alternatives. I have a MiFi, I have a regular internet, I have hotspot, I have like all of that. So we're trying.
All of the internet service providers?
Everyone, like whichever one, you just flip.
Wow, that would be tough. Then I saw a report recently that nearly half of Nigerian employees have job titles that are unrelated to their course of study, and I'm sure that must be helping with Nigerians are able to get some of these roles. But looking at the future, do you see this trend continuing? With Nigerians not working far from what they actually studied in school. Do you see that growing, and what are you seeing for the future of remote work?
I see that growing, and you're looking at someone who has also done that. So I studied accounting at the University of Benin. However, I work as a business analyst and now a consultant, and I work in tech. Never studied computer science for one day. And I'm an advocate for trying new things, learning new skills, getting certifications. That's what I teach people how to do at Business Analysis School. I know that remote work is going to continue to grow. I know that with skills and experiences, you don't need a lot of degrees. Get your bachelor's in whatever you can, history, Yoruba, English, learn skills, get certifications, and take that to work and go in high-paying roles.
Right, because there's a cost of living crisis.
Yes,
right now.
there is.
People need all the inflows.
They do.
They can get at this time.
They do.
But for somebody that's trying to juggle a lot of jobs, at this point, what's your advice for that person? Because there's also risk of burnout. Yeah. So how do you handle that?
So I'm not a fan of becoming overemployed. I always tell people, look at what the market wants. What are the high-paying roles? That's what I did. So what pays the most money, the skills I need to learn to get those kind of roles, and just focus on that. Now, if you have extra hours, you can freelance and consult on the side. And when you're consulting, you determine your pay, and that increases your income. But being overemployed, I do not recommend that at all.
Overemployed?
Yes. That's what it's called, overemployed.
Overemployed.
Yes.
Quite interesting. So what do you see for 2025?
Oh, 2025
is
going to be interesting. I see more remote jobs. However, there's still going to be more hybrid too as well. That's very common in Canada and the US. I actually see more Nigerians working with global companies. So with the layoffs happening in Canada and the US, these tech companies are hiring in the Philippines, in India, in Pakistan, in Eastern Europe.
So with the layoffs we're hearing from big companies in those countries,
that's what's
employing.
They are employing. So these entry-level beginner roles, for a junior developer, you can get someone great in India or Pakistan to code for you. And so we have amazing developers, tech people in Nigeria. And I'm telling Nigerians, take advantage of this opportunity right now. And then what they just do is they just have a senior person overseeing the people in these other countries. So Nigerians have an opportunity to start to earn in dollars, take advantage of the layoffs and the opportunities abroad. And that's what I'm talking about at the Business Analysis Summit.
Exporting talent.
Yes, that's it.
Thank you so much, Enorika, CEO, founder, Business Analysis School.
Thank you for having me.
All right, we'll take a break now. We'll find out how your money is performing. That's at Intraday. That's in a moment. Just stay with us. The global markets that we track, we know yesterday for the NGX there, we've seen that back and forth movement, and Anita will be giving us the details on what's playing out at Intraday. Is it more ping pong we're seeing?
Yeah, Ladi. Back and forth, just like you mentioned, is the watchword, because Monday positive, Tuesday negative, Wednesday positive, and then Intraday, guess what? In the red.
In the red.
Yeah. If you can take a look at it, there you have it on your screen there. Intraday 0.15% for Nigeria, for the local bourse. And of course, 97,000.
0.15 looks quite convincing that we might get a negative close today. Well,
this was the last we tracked this last about some couple of minutes ago, about an hour ago.
Right.
So, but so far for this level, 97,000. Don't forget that we'd gotten into the 98,000 level, but no thanks to profit taking by investors. Of course, they need to take profit from where they put their money. So that's why the market has receded all the way. And yesterday, the market lost about 96 points. Well, it gained actually 96.14 billion naira. So we're still seeing that oscillation, that up and down seesaw movement for the market. Okay, so now let's take a broader picture at the continental bourses for for the African continent. We were talking about the Nigerian exchange performance at Intraday, but also take a look at Johannesburg Stock Exchange. It's also in the red, 0.33%. 83,000. This had reached, at some point, 87, gone down to 85, but now lowered to about 83,000, 526.00 for intraday numbers. And we'll be looking out for how that market closes, but that will be for tomorrow, where we take a look at the performance. Now, for the other sides of the market, this is the only gainer at intraday. The EGX 30 is 31,555.31 and up 0.39% at intraday. While for the Nairobi Stock Exchange All-Share Index for Wednesday's close, it was in the green, but as for yesterday, 0.42% for that market within that the East African region. And now let's take a closer look at the performance of the local bourse yesterday, where we see the market coming at about 0.16% also, but it was in the green. So now we would take a look at that and also look at the intraday activity and then what to expect for the markets into the close of Thursday's trading session. And we have Nathaniel Disu, financial market analyst with African Invest to give us. Okay, so maybe for now we may not be able to have Nathaniel, but so far yesterday we saw the impact of bargain hunting by investors for the shares of Dangote Sugar, UBA, actually what you call the FUGAs acronym. That's the acronym for First Bank, UBA, GT Core, GT Bank, Access, and Zenith. So they and about 24 others made the market to go into the green territory. So we saw that back and forth. And of course, we will be looking out for how that market closes for Thursday's trading session. But so far, no earnings have been released. So no earnings news. We're still within the third quarter earnings season, which is going to be wrapping up. And let's not forget that tomorrow, Nigeria will be having the much expected inflation number, which will come before the final Monetary Policy Committee meeting of Nigeria's Monetary Policy Committee, the Central Bank's Monetary Policy Committee meeting, which is coming up just about a week and a half from this week. So now, for that market, let's talk about the Middle Eastern market. We see the markets was trading a little bit mixed. Yesterday, we saw the Dubai index was in the green, but this time at intraday, Dubai index is very much in the red, but although not too much deep in the red, by just 0.07% in the red, 4,729.66 for that market. While the Abu Dhabi index, well, it took a positive swing this time, 0.36% at intraday, and then its level 9,045.60. But for the Saudi Arabia stock market and for the Qatari market, is also a little bit of mixed sentiments there. We have the reds here for the Saudi and then the green there for the Qatari Stock Exchange Index at intraday. But of course, those numbers are just before the market closes. So they'll be closing for the week today. And then the other markets will continue for the rest of the week or for tomorrow. And now let's talk about the markets, the world's number one stock market. The stock futures, earlier they were in the red, but this time they've gone back in the green. And this is coming as Walt Disney, that's one of the entertainment giant there. Its shares were up more than 1% in pre-market trading. And this because the media giant had reported its fiscal fourth quarter numbers, which beat analyst expectations. So Walt Disney is among one of the averages that you see here. That should be on the Nasdaq. Nasdaq is up 0.10%. For the S&P 500, the S&P 500 is 0.11%. That's for the stock futures. While the Dow Jones Industrial Average, where we see all the industrial giants there, 0.12% for ahead of the opening bell, which will be 2:30 Nigerian time. So, but yesterday we saw the GDP, the inflation numbers out of the US, which came in line with some expectation. It was up at about 0.2% at 2.6% higher than the previous number. And this is also given more expectations that the Fed, the US Fed, will further cut rates, which will be for the third time so far this year. Of course, for the world's biggest central bank. At the same time, the market will be expecting the October Producer Price Index, which is expected to be released later today. And then tomorrow, the retail sales report will be out for tomorrow. And speaking of the Fed, the Fed chair, Jerome Powell, is set to speak today in Dallas, all about the U.S. economy reacting to the inflation numbers coming out of the world's biggest economy so far for the month of October. And then from the United States, we go over to Asia, where we see a negative picture there. They're also tracking that the CPI out of the US, where we see the Nikkei down 0.48%, Kospi, South Korea, 0.39% in the green. Hang Seng Index almost 2%, 1.96% down. And for the other two markets for the Asian region, Shanghai for China, 1.73% in the red, and the Nifty 50 down 0.11%. Talking about the Nifty 50, India's central bank governor is warning that the global economy is risking a return to inflation, and this is coming on the prospect of higher trade tariffs and tighter immigration policy, which is perceived to be coming under a second return of U.S. President-elect Donald Trump. This is expected to fuel inflation, and then which, of course, could put in the brakes on the Fed's rate-cutting cycle over a long term. So far, that is for all the markets' expectations of Ladi. Inflation, tomorrow, Nigeria, we will be expecting our inflation numbers due maybe about 12:30, 1 o'clock.
Right. All eyes on
higher.
that. Investors will definitely be looking out for that. But let's see if it's in line. But it depends on what the expectations are at this point. But I guess it's higher.
Yeah, for FDC
Consensus
forecast about 33.7%.
Yeah, so it's higher, but
it's going to be higher.
Slower pace.
A slow
Keyword. Thank you so much.
Pleasure.
Intraday for giving us a detail from most of these markets that we track. But let's take it on to London now. We have Juliana standing by. Great to have you, Juliana. So we see financial information company, that's Money Facts. They reported that the average fixed-term mortgage rates have risen this morning. It looks like it's bad news for those looking to buy a house in the UK.
Good afternoon, Laddie. It is bad news, and it seems as if it's been a couple of years of bad news for mortgage holders in the UK. I think mortgage holders thought that they would have a huge sigh of relief when post Trussonomics and that disastrous budget, we had a steady pair of hands in Jeremy Hunt, who, of course, was the Chancellor before Rachel Reeves. But that hasn't happened. Mortgage rates were up and down. And now, even with the new Labour government promising relief, it doesn't appear to be that way. But this is all down to the Bank of England, according to reports, because, of course, last week, interest rates were slashed yet again by 0.25% to 4.75%. And immediately after, there was a rush of mortgage applications. So to kind of balance the books, we've got some of the big lenders, particularly Barclays and NatWest, increasing their mortgage rates. So this is only been adjusted over the past couple of hours, but now a 2-year fixed mortgage has risen to 5.48% from 5.44%, and a 5-year fixed mortgage rate has risen to 5.21 from 5.17%. Now, of course, those 0.2 to 0.5 may not seem like a lot, but it is on top of all of the other mounting bills that we have in this country. So it is quite concerning. What we had with Jeremy Hunt, Rachel Reeves' predecessor, was a hauling in of banks, of lenders, trying to get them to do their very best to make sure that they're not profiteering in this time, and putting in some cushions so that if anybody was struggling with their mortgage, their house wouldn't be up for repossession within the first 6 months. Perhaps we will have to go down that path again. But Money Facts have just released this data. It is only a slight increase, and they are citing it against the kind of rush to get a bargain because interest rates are falling, but the banks have counteracted that by lifting up the rates. So not great reading for mortgage holders who have, for at least the past 2 years, been cushioning the burden of the cost of living crisis that's still ongoing in the UK.
Right, and still about the cost of living crisis, we see the price of next day gas. In the UK, that's trading at its highest level since last November, up about 4%.
Yeah, that's true. We have had natural gas prices reach a 1-year high, not just in the UK, but across Europe, particularly in Amsterdam. And it's getting colder. So typically around this time of the year, Laddie, we do see prices increase because, of course, you're going into the reserves. Most people, if you're in the UK at the moment, I'm telling you, it is really cold, bitterly cold. And it's at this time that people pump up their gas, try to get their heating turned up. And of course, that gas has got to come from somewhere. So they're tapping into the reserves. And that is why prices are higher. There seems to be a lot of panic buying. But then also we cannot forget what's happening in Russia, right? Geopolitics is making it very difficult and tense. I know that there are some legal discussions currently taking place with Gazprom and UK courts, as well as Gazprom and regulators within the EU, and that is also leading to panic. But again, not great at a time where we don't have that safety net that we had a couple of years ago when the British government were trying to negotiate with gas providers in the UK to make sure that gas didn't reach a higher price than what consumers could pay for. We don't necessarily have anything of weight in place at the moment. So this potentially could lead to higher energy bills for households and businesses. And of course, the knock-on effect of higher energy prices is that it costs more to manufacture. And so really difficult at the moment as we're coming into the all-important part of the year, the golden period, Christmas, where people are spending more. People, of course, are inviting more people around their homes, so they're making sure their homes are hot. But of course, if it costs too much to heat your home, then the fear is people won't do that, which, believe it or not, does lead to excess deaths in the UK. So I think opposition party members are watching this very closely to see what the Labour Party can do to mitigate against these higher costs.
Right, and it's quite interesting. I got a check on natural gas prices. Things down about 1.24%, still at $2.94. But I guess, Juliana, regardless, we'll just try and make the best of this Christmas. But it seems the Trump trade is hitting the pound. What's playing out in the markets there?
Well, here in the UK, the only thing the city is talking about is the Lord Mayor's banquet this evening at Mansion House, which is a huge event, very pomp. I'm sure you'll be getting lots of that picture on your TV screens tonight, if not tomorrow. It's a really important event where the government lay out their fiscal policy. But I think all eyes are not really going to be on Sir Keir Starmer. They're going to be on Rachel Reeves. She has made a few announcements. One that's hitting market sentiment today is reforms to the pension fund. Apparently there is going to be a pension mega-thon totaling more than 80 million pounds, should I say, and that 80 million pounds is going to be going to investment in schools, investment into critical infrastructure like rail and roads across the UK. That is a big one. We're expecting a fully fledged announcement by Rachel Reeves, the UK Chancellor of the Exchequer, tonight, but sentiment is good, and as you said, Trump weighing on the pound. But if we have a closer look at the numbers at Intraday, the all-share is up 0.15%. The blue chip index is up by 0.15% too, and the FTSE 250, the domestic market, up by 0.21%. In the currencies market, the British pound, as you said, trading down against the US dollar, which is flying high by 0.59%, though the pound is trading down too against the euro by 0.01% and down against the Japanese yen by 0.07%, Laddie.
Right, I guess King Dollar rallies on. Thank you so much, Juliana.
Thank you.
All right, let's get a check on what's playing out in Europe now. See, German Chancellor Olaf Scholz has agreed to end his term earlier, calling for a vote of confidence next month and announcing that the election will be held in February 2025, 7 months before the elections were scheduled. Well, in the first speech since the coalition collapse, he urged that Germany must not become as divided as the USA is at the moment. For more now, let's talk to Varda Imrach now. She'll join us from Berlin. Great to have you, Varda. So let's start by talking about the budget and debt issues, that caused this collapse. Has there been progress since then?
Thanks for having me. Well, Laddie, Chancellor Scholz addressed the parliament and faced a lot of questions from the conservative majority in the German parliament. One point was aid for Ukraine. This has been a pressure point because multiple parties, including the far-right AfD party, have called for a suspension of military aid to Ukraine. This was also an issue when discussing budget and debt because, as Olaf Scholz said to the parliament, Germany wants to support Kyiv, but not at the expense of German prosperity. There's also the issue of passing the 2025 budget, which has been in deadlock for months now. Scholz and his minority government is looking for partners within the German parliament who can help him pass important legislation, including the budget. The debt break is still something there is no consensus on. Different parties have different takes. But Friedrich Merz, the man who many say is slated to be the next chancellor, has said that Germany needs a fundamentally different policy, especially when it comes to security and the economy. So for now, there's no real progress, but there are hopes for a better December politically.
And what kind of economy will Scholz leave behind once his reign is over?
Germany is Europe's largest economy and has been an economic engine of sorts for the entire European Union. This is a very vulnerable time for Germany, a second consecutive year of contractions in the economy and recession looming large. There is much anxiety within businesses as well. There's a lot of debate about trade tariffs, tensions with China, increased competition with the world, and what a new Trump presidency could mean for Germany. And there's also the question of future support for Ukraine. This, Olaf Scholz said, would be a key issue for the upcoming elections. So the economy is not in good shape. And Scholz wants to get some welfare policies passed before his term is over, including an increase in child benefit. However, economic experts here say that Germany must reform the strict rules around borrowing to boost spending, otherwise it risks more periods of stagnation. The Federal Council of Economic Experts here have downgraded the company's forecast for this year from slight growth to a contraction. By international standards, Germany is lagging far behind in terms of the economy, the council said. But just to quickly add here, these problems are not new problems, rather issues that were brewing for decades.
Right. Well, let's turn to the markets now. What investors keen on today?
Well, investors in Europe will be setting their eyes on some numbers today, including the estimate of Q3 Eurozone GDP. This is important as it could boost confidence in Europe while assets in the US continue to grow in value. There's also the U.S. Federal Reserve Chairman Jerome Powell's speech later in the day that investors will be keeping an eye on. However, market watchers think that not much can be done or said before January 2025 when Donald Trump takes office. Bitcoin is rallying at full speed and the U.S. dollar is in great shape. The same cannot be said for Asian equities, though. Despite China announcing their massive stimulus plan, the Chinese market is not growing the same way. Shares in Taiwan and China traded lower. Hong Kong shares also dropped. Analysts say assets in Asia have slumped after the U.S. elections as investors are assessing and planning for changes after Trump takes over.
All right, Father, thank you so much for giving us the details of what's playing out right there in Europe. All right, to all the stories now, the Ugandan government will cut external borrowing by 98% to curb the country's rising debts. According to the finance ministry, they also announced significant reductions in government spending and domestic borrowing for the financial year 2025-2026. Overall spending will be slashed by more than 20%, as well as reduce domestic borrowing through treasury bonds by 54% in the next financial year to alleviate the debt pressure and prevent a crisis. The decision comes as the country grapples with rising public debt, which rose to $25 billion in June from $23 billion in the previous year. All right, to our next conversation now, the commodities market update. We see the price of lithium, which is a mineral in the alkaline family of metals, is commonly used in production of renewable batteries, including inverters, electric vehicle batteries. We see global lithium prices reach an all-time high of about $84,800, $84,000 a ton in November 2022. But following Russia's invasion of Ukraine, we've seen a massive drop. It's down about 90% today, at just $10,800 per ton. All right, let's talk to Osuji Chidebere now, analyst at Financial Derivatives Company. So what is responsible for this sharp fall, and is it sustainable?
Well, yes. Let me start with what is responsible. So after when the Ukraine-Russia war happened, right, it created supply chain disruptions, and that created this false sense of scarcity for lithium. And what that did was that it opened the eyes of countries like Chile, Australia, and Argentina that had deposits of lithium, huge deposits. So they invested heavily in increasing the capacity of their mining. And what that did was they brought in so much into the market. So what caused that sharp decline was an oversupply of the commodity. And you see that when you look at 2021, the price of this commodity, lithium, was $12,600 per ton, right? So now when you look at the price at $10,800, it's more like a correction. So what caused the huge increase, has been covered by the countries like Chile that are now supplying to the market. And yes, it's sustainable because now you look at it more as a correction to the price that it was earlier 2021.
Well, that's a large, heavy correction there. But you see, Nigeria's begun to invest, in this commodity. They've discovered commercial quantities, of lithium in Nasarawa, Kogi State, Ondo, Osun, and other states. So what is the current state of exploration?
Okay, well, the current state of exploration is still in its commercial mining. Okay, so investments have been done, and as you can see, we're just at a stage where I think Nigeria is trying to get it right. And when you look at the quality of Nigeria's lithium, you see that the concentration standard is 0.4% of lithium oxide, but Nigeria's quality of lithium, the concentration goes from 1% to 13%. So the quality of our lithium is very, very good. So they're still at the exploration stage, investors seeking partnerships and the rest, although they've started mining, but there's need for investment to increase the capacity to explore, the kind of quality of lithium that we have.
And definitely, we know the future of electric vehicles and, implication for global demand for lithium. That's somehow in big doubt, right now with the election of Donald Trump. He's anti-clean energy at this point. So, now that Nigeria is just catching up with the cusp of lithium, is this a question of being a dollar short or an hour late?
So I won't agree with that. So let me explain. Nigeria could be seen as relatively late when you look at Chile and other countries that have heavily invested in their own mining capacities. But you have to remember the other reasons for which Nigeria is looking at lithium, because we've been trying to diversify from just solely exporting crude, looking at other options. So short term, yes, we could be affected because as Donald Trump moves, with the fracking and more exploration of fossil fuels, it may, influence the price of lithium short term. But long term, when you look at Nigeria's goals of diversifying, our export portfolio and looking at lithium, and also, the global awareness of green energies and renewable energy, you see that we're not late. We're just trying to get it right.
All right. Definitely hope we get that right. Thank you so much, Osuji Chidebere, analyst, financial derivatives company. Thank you.
Thank you very much for having me.
Well, let's get a check on what's playing out in East Africa now. See, Kenya's foreign exchange reserves has risen to the highest level in 3 years as capital flows into the East African nation accelerated, helping to keep its currency stable amid a sell-off elsewhere in emerging markets. Reserves held by central bank rose to 8.6% to $9.32 billion, compared to a week earlier, sufficient to pay for 4.8 months of imports, more than the minimum 4 months that it aimed to maintain as a cushion against short-term shocks. All right, now let's get a check on what's playing out in the crypto market. And yes, as Varda said, it's green, with deep green with most of the altcoins that we track, with the top 100 coins on coin market cap. Bitcoin, $91,383 last time we took those numbers. And receipts are mostly green on the screen, showing what Coin 360 is playing out there. Ethereum, $3,210, up by 1.42%. Let's get a check on the top stories now in the crypto market. We see Bitcoin surpassed Saudi Aramco. That's by market cap, propelling. We've seen Bitcoin propel to new highs, and that's taking it up against the world's largest assets as of November 14. That's today. The cryptocurrency outperformed traditional heavyweights such as the mighty Saudi Aramco. Now we see a crypto influencer last seen on June 21st, after which he, along with his 3 friends, they got kidnapped from a residential unit in Montreal. Mashasi has set his foot in Montreal crypto community and has also owned and operated a private crypto investment. But we see the influencer there was found dead in the country, and police are still trying to find out the reason. That's areas known as the crypto island, definitely. But let's get a check on what's playing out with the market. Now, joining us, we have Gilbert Jopata now. Joining us via Zoom. Hello, Gilbert. Hello, Gilbert. Can you hear me? You might have to unmute. I think I see your mouth move. Okay, fantastic. I hear you now. So it seems Bitcoin is not ready to end this rally the way it's looking. It's back above $90,000, and the altcoins are looking quite green.
Okay, Bitcoin did not just hit a new all-time high. The entire crypto market itself also reached 3 trillion. And it's hard to ignore an asset that has this large market cap. And just like you said, we also surpassed Saudi Aramco to become the world's 7th most largest asset by market cap. And next up is Google. And this is just the early phase of the typical runway bull market. So a lot of other things is going to take place. Recently, the Hashkey Group CEO also said that the Donald Trump's pro-crypto administration may push China to relax on its restriction on Bitcoin, because there is always a trade war, especially when Donald Trump is president with China. So if you look at what's happening and you understand the phase we are in the market, and you see that there is a pro-crypto president has been elected, don't forget, this is the season where typically Bitcoin always do well, which is always 6 months after halving that the supply shock get priced in, and also once the summer is over. And then all of a sudden we are having all these key events that is going to trigger an even more sustained run. So yes, Bitcoin still have a very long way to go, and it doesn't look like it's easing anytime soon.
Right. So I guess some would say maybe it's programmed, at this point. But making profit is one thing, but getting that profit out before Mr. Market takes that profit from you is another thing. How do you take profit in this market?
Okay, there are different ways which profit can always be taken, in the market, because what's important is not just what you make, is also keeping what you make. So one of my favorites is laddering your exit. So typically what this has to do is, instead of trying to time the market, you just set some short-term, mid-term, and long-term profit levels. So if it gets to your short-term, you take profit. It gets to your mid-term, you take profit. Likewise, long-term. This way, you capture profit while still riding even more higher market trend. But my favorite is selling when your investment goals are met. So before you start out, investment is a plan. So you have an investment goal well written, which you've already priced in your risks to reward, and all of it, and then time frame of outcome. And once your investment goals are met, once you have reached this milestone, you just get out of the market and don't try to get caught in the hype and then miss out on the chances of securing your gain. One order that more technical traders use is more like using trailing stop loss. So as the market keeps rising, you set trailing stop loss to automatically sell portion of your asset if prices drop to a certain percentage. And then one of the fourth one, which it's not even something I will encourage persons to do, because this is highly technical, skilled, experience, and in most cases, even the best of analysts always miss out is once you notice weakness in the market, you notice that there's an overall weakness of trend.
Right, yeah, yes. Okay, so I lost you for a moment there, Gilbert. Yeah, it's frozen. But Gilbert, thank you so much. I hear you. Definitely, once you make a profit in any market, the next thing you want to think about is how to get out of that market before Mr. Profit takes all of that. But thank you so much, Gilbert. Always great having your perspective. So that's the show today, and that's how major markets we track are looking. Thank you so much for watching. Ladi Williams, and from me and the team, right here at Channels HQ, is bye for now.